Welcome back to the channel, your home of opium-free crypto and economic market cycle updates. Today, should we panic about the most recent dump on Bitcoin and cryptocurrencies? Of course, if you've been following the channel, you know we've looked specifically at this over the last several weeks for the signal for the top and what we could expect coming up. So in today's video, I want to go through that in a little more detail, update the charts for Bitcoin and cryptocurrencies, and of course, the big macro warning chart pattern for many cryptocurrencies, splitting cryptos from ETH and Bitcoin. So keeping those in one side of the field, big macro warnings on those. So let's take a look at that in today's video. Of course, if you haven't already, like and subscribe so you can follow along and get the updates before they happen, before it comes out in the news, because obviously the mantra here is the charts are greater. They are better than the news. They tell us the information before it comes out. We've done this for many, many years now. Bybit, link is in the video description, $4,500 of sign-up bonuses, plus thousands of dollars of sign-up bonuses if you open a new account with that link down below. Plenty going on here, especially if you're trading anyway. There's the options for thousands of bucks there. And for the Aussies, for your fiat on-ramp into cryptocurrency, SwiftX, link down below. All right, guys, let's take a look at Bitcoin. This has been the rollover effect. We looked at this yesterday. So make sure you definitely check out these last couple of videos. I always leave a playlist at the end of this. This has a lot of information in them. So let's update it today. 19th, the market started to top out. That is what we looked at based on the volume profile and the fact that the market could not keep pushing up after strong volume. What that means is the buyers in the market didn't have a strong enough reason to continue buying and pushing the price higher, regardless of what the news said, what social media personality said, what social media in general said. There was just not enough in it to continue pushing the price up much past around $24,000. We got to about $25,200. Now I had two areas I was watching, always watching the upside, always watching the downside. The upside level that I'm waiting to be covered is $26,900 right here. This is my Wyckoff bullish flip. Again, details are in those previous videos, so we won't go through it in heaps of detail. We're waiting for this to happen because that is the bullish signal flip, at least in the short term, looking at the daily. So to the downside, we looked at many candles, the gravestone dojis here that just continue to push the market down, even though the market was slowly creeping higher, getting slightly higher highs. The energy was just not there pushing it through. So we're always looking at both sides. We have to. We're just not one direction and only one direction, because that is a way to lose a ton of money. If you're only one-sided, thinking it's only going to go one way and you can't change your thoughts, that is a surefire way to get destroyed in the market. I hope you're seeing that now, especially if you've been following for months or even years along at this stage. One focus, one maximalist mindset equals destroyed in investing and trading. I know it's what a lot of new people love to feel and hear, because it's very hard to switch sides, okay? But if you can get into that, that way of train of thought, if you see other signals, then you are going to make it a lot longer in this game. To the downside, the support areas we're looking at was this small zone here between 22 and 22.7. That was for a hold up in the short term. It has now sliced through that cleanly, and the market is testing the 50% level. You can see as I'm filming this, we're dead on 21K. So the low at the moment is 21.2. The closing price, while we still have 11 hours to go in today's bar, 21,500. So what this is saying is if we do not hold up at this support zone of the swing low here at 20,700 and slightly above 21,700, then I dare say we're probably going to come back and test these lower prices at around $18,000 to $19,000, which just means that this market, Bitcoin, cryptocurrencies are going to take longer to get back to those old all-time highs. If we fall into this weaker zone under the $21,000 level, this just means there's going to be more time for the buyers to form a reason to be buying Bitcoin. I know it sounds crazy, regardless of what all of the Bitcoin maxis say. There's only 21 million, blah, blah, blah. It doesn't matter. That stuff is basically just noise. This is what the buyers are telling us. The buyers are telling us, and the sellers, the traders, the investors in the market are telling us what is actually happening, not what the tweets are saying. So underneath this level, it's going to be a longer race to the all-time high. above this level, we're going to have a better possibility of reaching that 25K again to get back to the Wyckoff bullish flip price that I'm waiting for, 26,900. So that's for BTC. Fear and greed, quick update here. We are sitting at around 33. I dare say tomorrow this will probably drop under 30 once the data comes through. But you can see we've been climbing up slowly here. So this is the icing, you know, the nice piece of the puzzle. This is the bullishness, the hopium, if you will. The fear is lessening, the greed is rising. The price is remaining relatively the same if you look back to June. Okay, so we had the dump and we bounced out of that to about 21,700. We're at 21,500 right now as I film this video. Probably go a little bit lower by the time it's uploaded, but we're still around this same price. However, the fear is less. So now we're getting a divergence in the market sentiment. So this is good for a bottoming pattern in a macro sense. What does that mean? How can you apply that macro in a macro sense? How can you take action on that yourself? To me, this is a longer term signal that the market is forming a base. That's as simple as it is. As I wrote in my tweet yesterday, follow me on Twitter, less is more. We don't need to overcomplicate things with CPI data and all this sort of jargon, okay? Let's just focus on what the chart is telling us because that is exactly what the traders and investors are doing. All right, so this big pattern, the macro warning here on cryptocurrencies, this is ETH first. It also has it. Remember, we were watching this up to the 5-week turnaround. We're not there just yet because we still have 2.5 days to go for the week close, the weekly close, and the swing has not turned down yet. But we've been watching this pattern, 1, 2, 3, 4, 5 total weeks up. We were looking for a potential reversal. That doesn't mean that we go to new lows. That just means that there would be a stop in the uptrend. That's it. And this is on a weekly chart, so it's a macro look at the market. So that is playing out as anticipated. I'm not trying to big note it here, but it's really just looking at some basic timing, and it could go the extra week or two. The point is that to avoid losing money in the market, pay attention to signals like this that allow you to not jump on the end of bullish runs. So you don't want to get on the end of it when the train is coming to a stop. And taking note of the timing of the market helps a lot. So this little pattern here that is forming on Ethereum looks very similar to the bearish engulfing pattern. So you got the green candle up, full body, and the red candle down, full body, which takes out the entire body of the green candle. So that's what we're seeing at the moment for Ethereum, but it hasn't closed yet. Okay, so the signal is not complete. The same deal with the cryptos that we're looking at here. So we have Matic. This is all the scribble from the chart on yesterday's video. Is it the end? Is it time to panic? I don't think so. This is what we're looking for. We're looking for a higher low. So to make this a little bit cleaner here, let's clear up some of this. The higher low needs to form above the major low here at around 30 cents. This is for Matic, anyone trading this or looking to DCA into other major cryptocurrencies. And I would prefer to see it above all of these candle bodies here with the closing prices and the opening prices here, all of the bodies above around 55 cents. That would be a much stronger higher low forming for the next takeoff point. Okay, so it's not over yet. This is a good sign. After a big long rally, there should be a point where the market does take profits, and you can see the move out if I clean this up. So looking at this big move out, that was basically the play. That was the breakout that we looked at here on the channel, break of about 60 odd cents. The move up got you about 50%, a little more, and then we peaked out at that 50% level at $1.03. Market is down. This at the moment, 2.5 days to go on a weekly macro look, is looking very much like a bearish engulfing pattern, which is the macro bear signal for here. However, the silver lining here is if we do get that higher low forming above those tops, that's a strong position for a DCA move into cryptocurrencies. And I don't say that lightly. There definitely has to be, must be. Don't trade without stops, because if that market starts to fall down and break these lows, that would be my signal to get out. And the percentage loss there is about 50%. So keep that in mind if you are DCAing into the markets. I like to wait for confirmation, the move higher, to break some of these tops here. that is the confirmation for me. That's the premium that I would pay rather than trying to time the market and buy these DCAs. I want the confirmation telling me that it's time to go. One for the ADA fanboys. This is also looking quite similar as well. This is the daily chart. We've got a level here of about 43 cents that the market needs to hold. Other than that, the final holding point before we capitulate is probably about 40 cents. You can see that's the low here on the 13th, also the low on the 12th of May. So ADA really has not shown any sort of strength breaking previous highs here in June. It's basically struggled to get anywhere near those tops. And on a weekly chart, it's also looking rather similar to what's happening on Matic and many other cryptocurrencies. So if you're finding that your crypto is having this particular pattern here on the weekly, remember there's still 2.5 days to go before this close, then this is probably a significant warning sign, and I would be having some sort of stops in play underneath these major lows, whatever it is in your cryptocurrency. As for ADA, it's approximately 40 cents. And note that the market could spike down and then come back above. This is all just part of trading and investing, but without a solid plan, a money management, a risk management system, you're basically at the whim of the market. It dumps below and you're like, where the hell should I have sold out? That's where I'd be looking right now if I was in a position here around that 40 cent mark for ADA. Solana also looking very similar. Look at the patterns here. They're very, very similar. The bearish engulfing is currently taking out Solana, 2.5 days to go. So let's see where it closes. If it can close back in the body of the previous week across any of these cryptocurrencies, then we might be saved from the old bearish engulfing. So that would then mean we're not as bearish as what we currently are, and we might actually hold up at these levels. For Solana, the swing bottom here at $30.80 and another swing bottom here at $34.60. That is going to be the zone that needs to hold. Otherwise, we're probably going to come back and retest the 26 level. Now, I emphasize here that there are possibilities. It's something like Solana, Matic, anything that is pumped really, really hard during the bull market has the potential to come down a little further. Now, I'm not going to get ahead of myself here, but the targets I am watching are approximately $19 for the low in Solana and as low as 12 bucks here. We're not even going to worry about the single digits just yet because this move has been extremely weak. We never got anywhere close to 80 bucks. But we really need to see $30 to $34 hold. That's the good sign. I'm not saying Solana is going to $12. I'm just saying we need to see this level hold right now around those $30 to $34, and then we can decide what happens from that point for Solana. Now, if you did want a DCA into something like Sol at those dollars, at that dollar level, 30 to 34, I'd be looking very close to have my stops around $26 at that previous swing bottom, because who knows from that point whether it just drops down to 20, 19, possibly 12. Okay, that's down the road. But basically just to have a risk management plan in play if you were trading. I want to see you survive this bear market and not get caught out, lose money, because the bull market is coming. That's my hopium for the end of the video. Thousands of dollars of sign-up bonuses in that video description. Like, subscribe. I'm over on Insta and Twitter. I'll see you there for Q&As. Till the next video, peace out.